If people with more power and money to invest got a different set of facts and information and analysis than the average retail investor, then yeah, that's troubling.
This is the civil rights issue of our era.
Soy Mitt Romney y apruebo este mensaje.
Mitt Romney is advocating himself as a job creator, and so his record is absolutely relevant in this debate.
Good evening, everybody, and welcome to RFL. I am Richard French. Thank you so much for joining us this Wednesday evening, May 23rd. Got a lot to cover tonight. And first up, though, Facebook. Are they two-faced? New revelations coming out about some shady business ahead of Facebook's IPO. And we're asking just how prevalent this kind of stuff is, this information vacuum for the regular investor when it comes to Wall Street. And next, Mitt's Mormonism. There's a new poll out that has raised more than a few eyebrows. It suggests that his faith may be a bigger issue for many voters than we may have anticipated. Does a candidate's race, religion, or ethnicity still matter in 2012? And later, we've got a one-on-one interview with Senator Kirsten Gillibrand. We're going to hear from the New York Democrat on everything from her push to put women on the front lines to her take on the Bain years. And then a shorter sentence for Darun Ravi. No, I'm not talking about from what we thought a week ago. I'm talking about what we thought from this week. If you thought 30 days wasn't enough, get ready to get even angrier. His sentence actually going to be even shorter than that. We will explain all that and a lot more. It's coming up in this edition of RFL, but let's start with Facebook's status update. And our senior political correspondent, Andrew Whitman, he joins us in first position with the very latest.
And Rich, if Facebook had a dislike button, I'm sure you couldn't see this one coming, this would be the moment to use it. People are asking if inside information was available to only certain people in advance of Facebook's stock offering last week. Some suspect that was in fact the case, and now the IPO is the subject of a lawsuit against both Facebook and Morgan Stanley, who facilitated it. The complaint alleges that the two entities failed to disclose that Facebook was experiencing revenue growth reduction because of mobile device use. You might say Facebook's status has been troubled since its initial public offering last Friday. Not only is the stock down almost 20%, but now there are serious questions of fairness surrounding the much ballyhooed IPO.
But there are issues that we need to look at specifically with respect to Facebook.
Now, U.S. regulators want to know if big-time investors at Morgan Stanley were tipped off about a negative report on Facebook's finances Friday, information regular investors didn't get. The SEC is investigating. The state of Massachusetts has subpoenaed the bank, and the head of Wall Street's self-policing agency, FINRA, called the issue a, quote, matter of regulatory concern.
If people with more power and money to invest got a different set of facts and information and analysis than the average retail investor, then yeah, that's troubling.
Troubling because investors with access to privileged information might have known to sell the stock before others did.
You have a bunch of parties misled, and then they suddenly found themselves on Friday with something they bought at 38, which was rapidly dropping in value.
Regulators may also be asking if Facebook sold 25% more stock than they originally told the public they would, a move that could have prevented the stock from jumping in price on its first day of trading. Officials at Facebook declined to comment. Morgan Stanley released a statement saying it followed the same procedures with Facebook that it does for all its IPOs. Rich?
All right, Andrew, thank you very much. And let's bring in now to help break this down, Forbes Markets editor John Dobis. John, thanks for a few minutes. I appreciate it.
My pleasure.
Well, you know, for me, let's leave Facebook aside in terms of where the market value is now from the first day of the IPO. To me, the bigger issue was this seemingly information vacuum that the regular investor has compared to what those much closer or the elite investors are getting ahead of the game. Is this an anomaly, what happened at Facebook? Or if you got enough zeros at the end of your account, you're going to be getting information the rest of us won't. Is that far more commonplace on Wall Street than we'd like to acknowledge?
I think it's probably far more commonplace than Wall Street would certainly like to acknowledge. This is kind of the situation you had in the late 1990s, early 2000s, turned on its head, where you had your wealthy clients making sure they got their allocations of the hottest tech stocks, eBay, Amazon, whatever came out, Priceline. But now it was the opposite. It was Morgan Stanley saying, hey, you know, Facebook doesn't really have this mobile thing figured out. We're taking down our estimates for next year. Oh, thanks. And So there's the thing called Regulation FD, Fair Disclosure, which says that if you say something about a stock and you cover it, you have to release it to all parties at the same time, not to selectively put it out there, which is what happened.
You know, it was interesting when the story came out. For me, wasn't too much of a shock for those of us who have friends, family, whatever, work on Wall Street. But so many people say, my gosh, they knew about this beforehand. And I said, hey, pal, guys had shares in this before even the IPO. Where you been? This is going on every day. Just give an idea, and it might depress the average investor out there, but in terms of lag time from when they get information, from what guys that with high-speed abilities to do for rapid trading, what they can do to not pervert the market, but at least have an inherent advantage, let alone the most valuable commodity of all, which is information that these guys have before the rest of us don't. Tell folks the reality of what's going on every day on Wall Street.
Well, let me back up first to talk about what Morgan Stanley and the other deal underwriters were doing. There was an S1, a revised statement that they have to file with the SEC. Any company that goes public does. They filed, Facebook did, on May 9th, saying that their revenue for the year ahead would probably be a little bit lighter than originally expected. All Morgan Stanley did really after that was confirm it and with their analyst. But yeah, I mean, the information is the most valuable commodity out there, and brokerages are not supposed to withhold it and to selectively disclose it to people. That was a big thing from the Elliot Spitzer era when he cleaned up, you know, guys like Henry Blodgett, who's a great reformed guy doing a show on Yahoo now, and the securities industry said we're going to separate investment banking and research and it'll all be better. But apparently it really hasn't changed a whole heck of a lot.
But for that day trader sitting at home right now, John, who says, all right, you know what, I'm going to wait for as soon as the latest labor stats come out here and I'm going to try and, you know, not time the market, but make trades. They're so far behind what the other, you know, major brokerage firms have already got on in terms of technologically they can't keep up, let alone there's an information trail that they are literally a day behind on. It's just the reality of what's going on in there. Supposedly proprietary information is going back and forth. Forget about minutes, even hours, sometimes days ahead of time that the average investor has no clue about.
There's a guy being sentenced on Wall Street right now, a former Goldman Sachs director who is going to be going to jail for insider trading, Gupta. It does happen, I guess. I'm not one of them. I certainly hear about it in the third party a lot, but you've got to assume with this kind of money, $104 billion valuation on a company, just that boggles the mind. It's an 8-year-old company that lets you see your sister's cat who lives in Oregon. And this is worth $104 billion. So I think anybody who got involved with Facebook up front kind of got, and this is awfully Darwinistic, but they kind of got what they had coming to them.
Yep. I'm with you, John, and I appreciate a few minutes. John Dobis from over at Forbes, thank you so much. All right, I want to bring in our table in right now and get into this. Dominic Carter, political journalist, author. Bill O'Reilly, GOP media consultant, who's worked on a number of campaigns, and Andrew Whitman, who you've already heard from. And guys, whether we are small investors, we've got family in the business, or whatever else, the dirty little secret is insider trading is always going on. It will always go on. But the perception, and I hate to be a wet blanket here, that the general public, this is the one platform or one medium where it's all about green. It doesn't matter what your color is or your bank account. This is the fair level playing field because it's all driven by the almighty buck. Please wake up, people. That's not how it works. And I'm not an opponent of capitalism. I love it. But technology has gotten way ahead of this, and people may not want to acknowledge it, but it's true.
Yeah, I think you're absolutely right, and I think it's why so many people in the American public are so skeptical of Wall Street and so skeptical of what goes on down there. This happens every day. I mean, it happens every day, and you're right, the common investor really doesn't stand a chance. Just even technology-wise, I mean, you talked earlier about the rapid trading.
Sure.
You're having millions of trades happen in a millionth of a second. How do you compete with that? And then you have a situation like this that breaks out that's just outrageous. People have to go to jail when these things are proven. They have to, white-collar crime has to be enforced.
And I think the rarity of seeing of that case right now with Gupta going before it, there should be, I believe, it should be more commonplace. But Andrew, the consequence of this, and I don't want to get into, which reforms we should do, Volcker Rule and all the rest, but the idea that right now this isn't incentivizing risky trading here with real potential consequences to the greater economy is completely naive. There's a cause and effect, and we saw it 4 years ago.
Well, and you mentioned that it's driven by greed, and it's driven by trying to make the green dollars and the bucks, and whoever has the best idea is going to get ahead when it comes to the market, and that's not entirely true, because I think the case of Facebook really shows that those who already have a leg up get a further leg up in a lot of ways when it comes to this sort of thing. Facebook's a great example because it's one of those areas where people might have taken a flyer on it. Sure, I use Facebook, I'll invest in it, but you're not getting the same information. It isn't fair. It does seem like the game is
the guys on the inside got burned because they're the ones who got their hands on the preferred stock here. They're the ones who got their hands on the IPO when the general public couldn't, and they got burned as a consequence, at least those who didn't get out in time. Dom, it's got to be disheartening, though. The more this comes out for the regular investor.
But Richard, newsflash, those with a leg up receive a leg up. Newsflash, breaking news.
But that's not the way Wall Street's supposed to work. What we always hear is that whoever has the best idea, whoever is the smartest when it comes to making the trades, that's how you get ahead on Wall Street. It's always the cream rises to the top, Dominic.
Baloney. Okay, let's look at what happens in Congress, for example, as it relates to Wall Street. 60 Minutes did that big expose on it, where you have elected officials that are holding hearings on what's going on Wall Street with insider information before anybody else gets it. They're becoming millionaires in a matter of weeks.
We're about to hear from somebody later today that profited from insider trading, Kirsten Gillibrand.
And then proposed a bill to outlaw it.
Yeah, and then proposed a bill to outlaw it. It's commonplace.
This is all true. I got to tell you, the only point is why I really want to do this tonight. There are people out there who believe, hey, you know what? I'm going to just be a day trader. I'm going to get my E-Trade account, and this is my chance.
But Richard,
buddy, wake up.
Do you really believe there are people out there like that?
I know there are people like that. I know there are people like that, which is the scariest thing of all. This is really, we're not a financial, but, and without being holy now, this was a public service. What I'm trying to do is, which is to say, hey, I got my money in the market too, but I'm not naive enough to think that I'm ahead of the curve. I'm so far behind it, and I got to save 401k.